Hey, good morning, Will.
Good morning, Celeste. Thank you for having me.
Yeah, thanks so much for being here. You guys, I have Will Gill with Gill Insurance of the Lowcountry with me today, and he is here to talk about insurance. Just briefly, Gill Insurance has been in business for about 60 years. They started in Rock Hill and have since opened offices in both Fort Mill and here in the Lowcountry in Mount Pleasant. They are a full service insurance agency, and I wanted to just ask Will a couple questions that might be beneficial to both first time home buyers and folks that already have existing homeowners insurance policies. So, again, Will, thank you so much for being here with me today.
Absolutely.
Will, what would the biggest thing that first time home buyers need to know when looking for insurance here in our area?
Well, specifically for first-time home buyers here in the Charleston market, I would say it's particularly important to understand your different deductible options when selecting a policy. Um, those could greatly impact which policy is going to be best for your specific situation. Since wind is one of the highest risks that homeowners in our market experience, insurance policies typically have a separate higher wind deductible than your standard all other perils deductible. That AOP deductible is generally a catch-all for everything other than wind, so that would include fire, theft, lightning, smoke, etc. AOP deductible is generally about $1,000, whereas your wind deductible is generally tied into how much dwelling coverage you're carrying. So if you have a $500,000 limit on your policy and you have a 1% wind deductible, that's going to be $5,000. If you have a 2% wind deductible, that's going to be $10,000, and so on. So if you have a claim due to a wind event, you're going to be paying a lot more out of pocket before the insurance company steps in and foots the rest of the bill. So I would suggest first-time home buyers having a general understanding of the different wind deductible options, because within that there are three different levels. There's your general hurricane deductible, which is going to be triggered anytime there's a loss due to wind when there is a hurricane warning in effect for the state in which you live. That's going to be the most attractive wind deductible because hurricane warnings are, it's not every year that we experience one.
Thanks.
The next step down is the named storm deductible. So that's going to include tropical storms. So that's going to be a little more likely than a hurricane deductible because just a slightly bigger pool of storms, and Charleston area does experience, tropical storms. Lately, it's been about once a year that we've seen that. So it's going to be a little higher likelihood that deductible would kick in the event of a loss. Your third option is simply called a wind hail deductible. So that is going to encompass any wind event. So it could just be a normal summer thunderstorm or hailstorm, where just last week we had some severe weather where they were calling for hail and tornadoes and whatnot. So even though that, there wasn't a named storm involved, if you had any roof damage from that storm, your wind hail deductible would be triggered and you would be paying that higher amount, that 1 or 2%, as opposed to your lesser AOP deductible. So just having a general understanding of those different options so that you can select, what makes sense for your situation. And then also working with a good local agent who can walk you through those options when you're picking between quotes, and you can make the best decision for you.
Well, absolutely. And that's huge, for someone that's buying their first home, whether they're going to spend $1,000 or $10,000, and
Exactly.
that could be really just almost like an issue that you can't fix. So
Yeah, and a lot of people, they they make a quick decision when they choose the cheapest quote that comes across their desk, but then down the road when they do have that claim, when they need a new roof, and their agent tells them, hey, we're not going to be able to file a claim because 2% wind and hail deductible, equals $10,000, and your new roof's going to cost less than that. So there's no point in even filing a claim. And then the homeowner doesn't understand. I thought, what do you mean we're not filing a claim to get a new roof? So it's important to understand your options, so that there's no big surprise down the road.
Absolutely. And, knowing, like you said, a local agent, I come into this a lot because you need to know about your area. And if you're not familiar with the Lowcountry and some of our very specific, flooding or moisture issues, things like that, I could see where there'd be some problems. I definitely.
Right. Absolutely.
So that is very, very cool. Thank you for that knowledge. Now, switching gears to folks that already have homeowners policies, how often would you say someone would need to reach out to you or someone else to have that policy audited to see if they have full coverage?
Absolutely. I would suggest, shopping your insurance coverage every few years, whether that's 2, 3, 4 years. Insurance companies rates are always changing, and companies are frequently getting into and pulling out of certain markets, specifically coastal markets, because the risk is so much higher for them here. So what was the best deal for you when you selected that policy likely isn't the best deal for you a few years later. So every few years, I would suggest that. And then also due to the inflation and skyrocketing construction costs, we would want to make sure that your replacement cost coverage to rebuild your home in the event of a total loss is still adequate. So that's the limit you're carrying on your dwelling coverage. If it's been 5 or 10 years since you selected that limit, you might want to bump it up a little due to inflation and construction costs increasing.
That's a really good point. That's not something I thought about, but you're right. I mean, construction's just skyrocketed here recently. So yeah, that's huge. And for everyone watching, I will put Will's contact information in the comment, and I'll make sure that it is readily available so folks can reach out to you. And now, last question I kind of have, we've seen a lot of changes here recently with the flood maps. FEMA recently changed some different flood maps. What have you seen, or excuse me, have you seen any big changes as a result of that?
Yeah, for those that don't know, new flood maps were released for Charleston on January 29th, and it has affected a lot of homes in the local market here. We've had a number of clients whose flood zones changed, and they are now required to carry flood insurance by their lender, or vice versa, they're now not required to carry it. So if you are in the situation where you are now required to carry flood insurance, then we can do one of two things. We can quote it with our private market options. Those do not require an elevation certificate in order to get a quote for your flood insurance. But if we don't have any reasonable options through our private market, you may want to consider hiring a surveyor to come out to your home and draw up an elevation certificate. Those generally cost about $400. It is probably a worthy investment, though. It's a one-time cost. And with that, we can quote an NFIP flood policy. That's the FEMA government-backed option, and it's generally going to be the better option for you. So that's probably worthy investment that I would suggest if you are now required to carry flood insurance going forward.
That's great. Well, Will, thank you so much for this information, and thanks for taking the time out of your day to chat with me. You guys, if you need anything within insurance, whether it's homeowners, auto, life insurance, please reach out to Will. As a little side plug, I've known the Gill family for a long time and consider them friends, as well as we've done some business together. So just really good folks, and you guys reach out for whatever y'all might need.
Absolutely. Thank you so much, Celeste. It's been my pleasure.
Thanks so much, Will.